And we are live again. Ken, thank you so much for joining me today. I appreciate it. How are you doing?
Absolutely. Yeah. Thank you. Thank you for having me. I'm doing great.
How's Florida?
Hot, humid, rainy,
Yeah.
thunderstorms.
Yes.
Really love it.
We're supposed to get some insane storms here in Michigan as well. So hoping that it passes us, and it's been raining here all day. But Ken, once again, thank you for joining me. I do have some questions for you. I know the topic of discussion today is highlights from President Biden's Made in America tax plan. I do have some questions, as I said, and I'm ready whenever you're ready to get started.
Absolutely. Let's go for it.
All right. Awesome. The first question I have for you is, can you explain what the proposed Made in America tax plan is all about and what it means to retirees?
Yeah, absolutely. First of all, it's important to understand that there actually are two announced plans. The Made in America tax plan is the primary plan and also America's Jobs Plan. And so both those were announced March 31st of 2021. And so the Made in America tax plan proposes tax increases really on corporations and businesses that have international operations. And the American Jobs Plan seeks to use funds to address deferred maintenance by modernizing bridges and highways and roads, but also to invest in clean energy and has incentives for advanced research and development and manufacturing.
Wow, that seems like a lot going on. So how does that affect a retiree?
Yeah, that's a great question for sure. And it is a lot going on there. And so I'm going to hit the high levels of it. Let's first revisit the Made in America tax plan. Mm-hmm. Now, it seeks to raise taxes on high net worth individuals and corporations. So that's the primary goal. And one of the main features of the Biden tax plan is to roll back the Tax and Jobs Cut Act of 2017. Now, many people realize that that's to sunset anyway, and it will sunset or expire in the year 2025. I think the focus now, though, is will it even last through the end of 2021? So let's take a look at specifically what's going on with that plan. And most all the brackets have been changed. The one bracket that didn't change is the personal income bracket. The very first one is 10% and stays at 10%. The next bracket is 12%, and that's been increased to 15%. Now, here's where I pause for a moment for most people and to put that into some kind of perspective. It seems fairly innocuous, a 12% to a 15%, up 3%. But the 3%, if you divide that through the original base of 12, actually means a 25% increase in taxes. And to give it even a little bit more perspective, for a single taxpayer, that affects the taxable income from $10,000 to $40,000 of taxable income for a single, and from $20,000 to $80,000 of income for a married filing a joint return. So effectively, what that means is a 25% increase in taxes for that amount of money in that section. So it's really kind of contrary to the idea that the tax plan is just for high net worth people. I think would agree that that affects most everyone in one way or another. But just to continue with the brackets then, the 22 bracket goes to 25. The 24 bracket goes to 28. The 32 bracket goes to 33. The current 35 stays 35. And the top tax bracket goes from 37% to 39.6%. So that's kind of a general change in the federal tax brackets themselves.
That seems like a lot to think about all by itself, but is there anything else for someone to know?
Yeah, absolutely. That's a lot all by itself because it affects a lot of taxation for many, many of the taxpayers out there for sure. But there is more, actually. The capital gains tax, the Biden administration proposes to eliminate entirely the 20% top bracket and replace that with the top ordinary tax bracket. Now, remember, a moment ago, I stated that was 39.6%. So a 20% top cap gain bracket now goes to 39.6. So that's fairly profound for many, many people who have capital gains out there. Also has changes to itemized deductions. And then also calls for a reinstatement of the alternative minimum tax for most all taxpayers. And there's more to it, but that's kind of gives you kind of the broadness of that tax change itself.
Can taxes seem so complicated and with so many variables and possible changes? What specifically would you suggest for someone to do?
Yeah, well, really get motivated and take the time really to take a look at your tax strategy. And for many people who employ someone to do taxes for them and have a financial advisor, make sure that those two professionals are talking to each other and coordinating their plans. I've always said that the biggest cost associated with growing money and taking income is the cost of taxes. And most everyone I talk to agrees that taxes are going up. Well, here's some empirical proof that taxes are moving in the upward direction. And now, if ever before, you really want to focus in on, do I have a tax strategy? And really ask the question to your professionals, how can I reduce my taxes? It's one thing to get the tax return done correctly and avoid audits and fun things like that. But it's another thing to be able to actually reduce the taxes. And that's what tax professionals are there for. And that's what financial advisors are there for. So there you have it.
Now, does Pinnacle Financial Wealth Management offer tax planning along with financial planning?
Absolutely. I think they go hand in glove. No question about that. Again, when you take income or grow an asset, it's the taxes that you pay. And keep in mind, it's not just the taxes you're paying in the current tax year. It's what's the runway look like? What's my path look like in the future? Am I deferring a tax now that I could pay higher taxes on in the future? I emphasize Roth IRAs. I think Roth IRAs are a great tool for many, many people. It may not be appropriate for everyone, but it's something to look into because that's a tax-free example of future income. And so, again, we have tax professionals within the office. Taxes are an important part of any financial strategy. And so, absolutely, we do offer that within the firm.
That's amazing. That's amazing to know. Ken, any other thoughts? Anything else we should know?
Yeah, for sure. It is really important to understand that everything we're talking about here today is fluid. It really evolves over the next few months, and we'll see how that plays out. There's nothing concrete. There's always going to be some kind of give and take. It's almost very likely that things will change going forward. And so it's really important to stay informed and stay active with it. And that's difficult to do when you're out enjoying life, whether you're retired, you go on summer vacations, and so on. And that's very often when a lot of this work gets kind of pushed through and things are happening out there. So I would say check back with our Facebook page. That's a great way to keep in touch. I mean, we do a great job of giving updates, future updates and future broadcasts that will keep you in tune with what's going on, especially if it's profound. If it's something, a big time tax change out there or financial scenario that should be talked about, get on our VIP email and get current updates and the advice. And we talk about all the hot topics. Plus, I would say send me a private Facebook message and include your email and be happy to keep you on that list and keep you up to date. You can listen in when it's available to you and things like that. Call the office. Happy to talk to you about it. Schedule appointments. I mean, whatever we can do to help keep you up to date.
That is amazing. And also, if anyone out there watching has any suggestions or wants to know information about any other topics, comment below. And Ken and I will absolutely. We would look forward to any open suggestions.
Yeah, people ask me all the time, it says, what's a byproduct of taxes and so on? And it's inflation. And
Yeah.
so, I mean, we were talking before the broadcast about how things are going up in cost. It's all over the country. Here in
Yeah.
Florida, our real estate prices are going up. And if your taxes are going up and the cost of just living is going up, I mean, that's a difficult road. And so again, that's the next piece really to talk about after taxes is, how do I afford to do the things that I like to do, the travel and so on. So love to talk about those kinds of things, and hope we can put something like that in the future broadcast.
Yeah, most definitely. I know I would absolutely look forward to that conversation because we are living it.
Yeah, for sure.
So, yeah. Ken, I appreciate you taking the time again to answering all my questions.
Yeah, it's been great. Thanks for having me.
Absolutely. You stay dry there in Florida.
I'll do it. You do the same.
Thank you. And everyone else, you have a wonderful rest of your Monday. And I do have Ken's website linked above. And click on it. It'll take you to his website where it'll give you more information about taxes and Calendly link that I have listed above as well. So it'll take you directly to his calendar, or like Ken said, private Facebook message as well. All right,
Thank
Ken.
you, everybody. Have a great day.
Bye. Have a great day.
Bye-bye.